Good morning, everybody. This is Yohay Elam of Forex Crunch and Market Movers in the morning show for FX Street. Today it's Friday, October 2nd, and it's Jobs Day. We have the non-farm payrolls in the United States. We're going to talk about that quite a lot and also cover the charts, other events going on in markets, you name it. As always, we welcome your questions and feedback and everything. So let's begin with talking about the events that we had so far. Yesterday we had the U.S. jobless claims. They came out at 277,000, just as expected. No surprises over there. That's another hint towards today's big event. And then we had a disappointing event, the ISM manufacturing PMI, which came out at 50.2 points, which was on the verge of contraction, but also in line with other weak manufacturing figures from around the world, from Europe, and most importantly from China. Then we had John Williams of the Federal Reserve of San Francisco. He talked about rate hike in 2015. Once again, this isn't much news at the moment. And everything, of course, is data dependent. Overnight, we had retail sales in Australia come out at 0.4% as expected. And Mario Draghi, he received some award in the United States, and he didn't say anything specific about monetary policy. He talked more about growth and more about better monetary union, nothing to move euro dollar. Okay, so maybe we'll take a look at the chart. If we mentioned euro dollar, so here we are, basically in range in a triangle, 111.70. It's sort of in the middle of the range. 111 is the bottom, 113 is the top, but the range is becoming more and more narrow. Good morning, Pan. Good morning, everybody else. Cassie Ski, AJ. Questions are welcome. So we have, now we're undergoing some tension in markets towards the on-farm payrolls. It's just 4.5 hours to go, but these are the levels to watch. 111 on the downside, 112.15 on the upside, and 113, of course, last week's high. So let's cover a few more charts. Pound dollar, well, still sort of depressed. There's more talk in the markets that the Bank of England will take its sweet time before moving. It'll wait even more time before raising the rates. Of course, we talked about this in previous shows. The Bank of England is expected to raise rates only after the Federal Reserve does this, but it may take more time. I'm not sure this is really correct because the economic situation in the United Kingdom is doing quite well, so you might see the pound rebound. Anyway, lines to watch: 150, 115. On the top side, 152. I think it's also waiting to explode after the non-farm payrolls. Dollar yen, once again, it's like a broken record. It's hugging the 120 level. So yeah, that's exactly what's happening. 120 is the line on top. At the bottom, we have 119.20. Basically, also, as you can see, the range is becoming more narrow and more narrow. So this narrower range, usually what happens after it is that currency pairs explode. They pick a direction and trend with it. Which direction will it be? A lot depends on the NFP. That's a rhyme. Okay, so now we have dollar CAD here. We do have a breakdown of in recent days. We had stability in oil prices, talk of a hurricane, also better than expected GDP in Canada. So we had the pair already reaching an 11-year high of 134.60, and now we're over 200 pips below this high seen just earlier this week at 132.40. 132.20 is what I see as support and resistance at 133.25. The bigger range, of course, as we can see here, the top and the bottom left corner of the screen is 130, very round number, and then top 134.60. Aussie dollar, we talked about this double bottom right here, 69.35. Then we had this hugging 70, between 70 and 70.40. We did reach higher levels, but now we're back closer to the 70 number. Perhaps the pair feels a bit safer around this level. Of course, all depends on the NFP. Kiwi dollar broke higher. Also here we had it retreat just a bit. It is at the moment holding above the 64 level. 63.10 is what I see as support. Resistance at 64.60. Okay. Dollar Swiss, very, very stable. 97.84, just under 98. Well, 95 is very significant support. Resistance is at 98.40. If we talked about dollar Swiss being stable, Euro Swiss is even more stable at 109.20. Well, Swiss franc, the Switzerland trades with the Eurozone, and that's why we see these pairs are on these levels. And of course, there is some kind of intervention by the Swiss National Bank. Let's move on to Euro Pound. Here we had some more movements in this cross. This isn't a cross for people who like lots of pips, but it does have trends. It does have nice movements. I think we've seen it top out at 74.35. Since then, we had a lower high. As you can see, just under 74. The pair didn't manage to recapture this level of 74. And now we're looking at support right here at 73.50. We'll see if it can break below this. Fundamentals reflect a fall to the downside, but of course, nothing works always as we expect. Euro yen, very stable, 134. Both safe haven currencies are trading sort of in tandem, one along the other. So support at 133.15 and resistance 135.40. And it's sort of clinging to this 134 level, not the same hug that we're seeing with dollar yen or with Aussie dollar, but also very stable. I'm not sure we'll see, contrary to other currency pairs, I don't think here we'll see any kind of explosion. We might see more choppy trading, but not a real explosion, because both are in the safe haven camp. Both trade in a similar manner, similar pattern. Okay, and last but certainly not least, one of you guys' favorites is the pound yen. We talked about yesterday about 182 as resistance. I think it works pretty well. We've seen it reach this level yesterday. Right here was a stubborn peak, and now we've seen the pair make another failed attempt to break higher. And many of the support and resistance lines here are round numbers, which makes it fun as well. So we have 181 to the downside, well, on the downside 182.50, 183.30, and well, far above is 186. Anyway, currently we're in a more narrow range. The pound is a normal currency. The yen is a safe haven currency. That means that we will see kind of lots of action once we get the numbers from the United States. Okay. So talked so much about non-farm payrolls. Let's talk about the details. First of all, yeah, non-farm payrolls is at 2:30. Before that we have, sorry, 12:30. Before that we have construction PMI in the UK during the show. We'll keep you up to date with what's going on there. After the non-farm payrolls, well, it's less important, of course, but at 2 GMT we have factory orders from the United States, and then Stanley Fischer, the vice chair, talks. And non-farm payrolls. Let's cut to the chase. Markets are expecting a rise of 203,000 jobs in the month of September. It's the last month of the third quarter. This is better than 173,000 jobs gained in August. Another important feature of this specific report, well, good morning, everybody, is we're expecting an upwards revision for August. Why? Because this phenomenon happens almost every year. So we have the figures for August missing expectations. Economists are disappointed. And then in the following month, we have an upwards revision for August. So economists are then proved correct. But of course, the markets focus only on the latest figure. This time, I think there's a bit more focus if we'll see an improvement for August, because 173 is above average. We've seen around 200, 220,000, 212, I think, was the average in the past 12 months. So August was a bit disappointing. Then we're expecting a revision. We might even see a revision of 50,000 to the upside, much better than expected, much better than had been expected back a month ago. So that's another important feature to watch. The unemployment rate is less important for markets. It's more important for headlines. It's expected to remain at 5.1% unchanged. But, you know, we have a very low unemployment rate in the United States because the participation rate is low. It stood on 62.6% in August, and I think also in July, and it's not expected to change this time. More importantly is the average hourly earnings, wages, salaries. Do people get a job that also pays money or not? So last time we had actually a positive surprise rise of 0.3%, and year over year it was 2.2. Now we're expecting a more modest rise month over month, 0.2, which is more or less the average, and perhaps we'll see 2.4% year over year, a stronger an acceleration of wage rises on a yearly basis. And this would be a break out of range, out of the 1.9 to 2.3 range, and that would serve as another hint for the Federal Reserve to hike rates. Thanks, Pan, for your question. I'll get to it just in a moment. More figures to watch regarding the non-farm payrolls. We have, well, participation rate 62.6. U6 real unemployment rate. What is the real unemployment rate? This refers to, it also counts people who are too discouraged to look for a job or people who are working part-time involuntarily. That means they want to work full-time, but they're unable to find such a job. This rate is being falling. Last time it stood on 10.3%. We don't have fresh expectations for today, but we do have, we believe it'll fall a bit lower. And the average work week, it's expected to remain at 34.6 hours per week unchanged. So we have a question from Pan. No real effect to Japan's announcement QE. Are you expecting a weaker yen? And what's the timetable, please? Okay, so I think look, in Japan, we had a streak of weak figures. We talked about it earlier this week. We had weak retail sales, weak industrial production, weak manufacturing PMI, and lots of talk from politicians that the Bank of Japan needs to do more, that more money printing, more monetary stimulus. And also the government talked about introducing more stimulus. The popularity of Shinzo Abe, the Japanese prime minister, is in decline. He would like to revive the economy. At first, the economy was doing well during 2013, but then it was hit by the sales tax rise. It hurt inflation and also hurt the level of, the economic growth. Now there's fear that Japan actually entered a recession. That means it had 2 consecutive quarters of decline in Q2 and Q3 in the months between April and September. We don't have figures for Japan, the GDP figures yet, but this is what we're expected to see. The timetable is we have a meeting next week the meeting is on October 6th and 7th. That means we'll have it on October 7th, which is Thursday. So Thursday morning, when we have the morning show, we'll already know the results of the Japanese decision. Many analysts don't expect a move in this specific meeting in October because there's another important meeting on October 30th, exactly 4 weeks from now, and this is expected to be a more important meeting. One of the reasons is that by the end of October, at least, we'll have the preliminary GDP figures. In addition, 1 year ago, in October, the Bank of Japan introduced more QE, also at the end of October. So you can see everything falls into place more for the decision on October 30th. This doesn't mean we won't have, there's no chance of a move next week. There is a good chance, okay? Because things are getting worse in Japan. But perhaps it'll be a more coordinated move together with the government, and this might take more time to organize together with the GDP figures. If you remember, last year we had a move by the Bank of Japan introducing more bond buys. Together with government policy, they allowed the pension fund to invest in stocks, which is, well, a bit dangerous, but it gave a boost to the stock market and some kind of boost to the economy. So that's regarding the Bank of Japan. We had some figures come out from Japan. Let's go back to the presentation. They weren't as important as previous events earlier this week. So this is the FX Street calendar on Forex Crunch. We had, well, some figures came out better than expected, some came out worse. Well, the ratio of job applicants actually went up to 1.23. This is, of course, good news. But the unemployment rate rose to 3.4. So when we're talking about more monetary stimulus, more government stimulus in Japan, it's always important to remember Japan is a very, very developed country. The unemployment rate is very low. It's a good place to live in. So they're not really doing that bad, the ordinary person. Okay. And then we had also household spending. Year over year, it rose by 2.9%, which is also good news. But earlier this week, we had worse stuff. You're welcome, Pan. A question from Imaki. Hello, Yohay. So if the data for the NFP and wages is strong, dollar-yen is the pair to trade. What about if data is weak? Which pair do you suggest? Nice question. So yes, dollar-yen is the pair to trade. Why dollar-yen? Because this pair, which is currently trading at a very narrow range, first of all, I think it's going to explode at some point, maybe today. But a better reason is that dollar-yen usually reflects best US data releases, okay? So in euro-dollar, we have other factors. In pound, in the Aussie dollar, at least the most genuine reaction, I think we'll see it in dollar-yen. But that's true if we have good figures and also bad figures, okay? If we talk about other pairs, if we have a really good figure in the United States, I think it'll be, of course, positive for the US dollar across the board, because especially if we have strong wages and maybe a rise of 250,000 or more. Why am I saying that? Because this will raise expectations for rate hike, and it will also show that the United States of America is doing well as an economy, and perhaps it can pull the whole world forward. Okay, so it'll be good, especially against the euro and the yen, which are safe haven currencies, perhaps a bit less against the Aussie and the Kiwi, but which are more sort of risk currencies. But a strong United States is good news also for Canada, because Canada trades with the United States a lot, naturally. They have a very long border. It's also good news for the pound, because we're expecting Mark Carney of the Bank of England to act after Janet Yellen. So the sooner a rate hike comes in the United States, the sooner we have one in the UK as well. Now, if we have a bad figure in the United States, that means once again under 200,000, perhaps under 180,000, like in August, no good revisions and mediocre gains in wages. Then we're expecting, of course, the US dollar to fall more against the euro and the yen, the safe haven ones, because money will flow into these safe haven currencies, and less into the risk currencies, because if the United States isn't growing, if China isn't growing, then why would you invest in Australia that is dependent, more dependent on China, for example, or why would you invest in Canada, which is also more dependent on the United States? So I hope this answers the question. Let's see what else we have in store for you today. Last day of the week. As they say, TGIF, thank God it's Friday. It was quite busy. Let's look at other events. Well, yesterday we had the manufacturing figures from all over the world, final figures from China, from Japan, from the Eurozone, UK, and of course the United States. And the picture is not so good. Okay, it was a bit better in Europe because it didn't disappoint. It was not as terrible as it could be in China because the bad news were already out, but it didn't look good in Japan and didn't look good in the United States. So this is sort of, as we know in the developed world, many people work in services, not in manufacturing. Manufacturing is automated and manufacturing is moved to emerging markets. Clothes are made today in Asia, computer chips, things like that. So but it's still sort of an indicator of how the world is doing. Okay, and we have another feature, of course, we talked about it, countdown to the non-farm payrolls. Intention is, of course, growing. That's why we see very narrow ranges everywhere. Bank of Japan, thanks to a question. Japan, I think we talked about that quite a lot. Political pressure to act as the recession looks real. And good news from China is that we don't have bad news from China because China is on holiday. It's the Golden Week. And this brings me to the next question by Pan about gold. Gold also tends to move, yes, on the non-farm payrolls. In general, bad news means more demand for gold because we expect more monetary stimulus and more money printing, lower interest rates, and good news means positive figure in the non-farm payrolls means more monetary tightening and less demand for gold. I don't follow gold that closely. I focus on foreign exchange and currencies, but this is sort of this is a gold fundamental, if you wish, apart from industry demand, jewelry demand, and so on. Okay, any more questions? Let's move on to if you'd like me to focus on a specific currency chart or something like that. Anyway, talked about non-farm payrolls. Then we have factory orders. Where's this chart? Here it is, factory orders, of course, much less important after the NFP. And the speech by Stanley Fischer, he's the vice chair. He's considered relatively hawkish, but thanks for a good segue. Stanley Fischer is considered more hawkish, but he's very close to Yellen. He has a lot of experience. He used to be the governor of the Bank of Israel. He worked in the World Bank. He worked for a few private banks. Anyway, his words do move markets. We're going to hear from him a reaction to the NFP, of course. Maki has another question. So, the World Bank warns the Fed against raising rates. Weak world economy growth. How much of weight do you put on that? Also, didn't Yellen state over and over that a cut will come after 5% unemployment and inflation under control? Okay, excellent questions. First of all, there's a lot of political pressure on the Fed from basically everywhere. So we have the IMF and the World Bank warning against rate hike. Why? Because if the US raises rates, there's going to be a mess in emerging markets. There are already some outflows from emerging markets. Money is coming out, and many corporations took loans in US dollars during all these post-crisis years because money was very cheap. And now if interest rates rise, it means two things. It means that interest rates are, of course, higher, and that means the dollar is higher. So it could cause a series of bankruptcies in the worst case scenario, okay? On the other hand, we have other people like Carl Icahn or others saying, get on with it already, because this low interest rate environment is just pushing more bubbles. I think the Fed sort of guided us towards a rate hike when data is okay, and I think it's already okay. And I think it's going to come in December. The Fed is supposed to work for the US economy first and foremost. Employment is improving, and inflation will come after employment. So the Fed needs to be ahead of the curve regarding inflation. Now, regarding your second question, yes, Yellen stated that a hike, I guess you meant to say, will come after 5% unemployment. Yeah, if we go back 2 years to the past, to Bernanke, the Fed had forward guidance saying that rates will remain low at least until unemployment falls under 6.5%. Okay, it wasn't an automatic trigger, just a minimal threshold. That means, and now we're at 5.1. But as also Yellen stated over and over again, the unemployment rate, which is 5.1, it's not real, okay? Because we have a very low participation rate. We have a participation rate of 62.6%. Before the crisis, it was above 65 to 66%. Now, part of it is demographic, because we had the baby boomers retire, but part of it is because the economy isn't doing so well. Wages are low. People prefer sitting at home and not even look for a job, or they're settling for part-time jobs. So now they see the unemployment rate, their forecasts talk about the fall to 4.8%. And perhaps when it reaches this level, it'll be what's called NAIRU, the point at which, the inflection point at which unemployment is so low that the inflation rate begins accelerating. So they don't have to see the white of inflation in the eyes before raising rates. They don't have to see unemployment fall to 4.8, but they want to wait and wait again before they backtrack. In order for them not to backtrack, not to raise rates now and then cut them later on. Okay, and we have another question from you, Imaki. Why the NFP is so important regarding the cut? Well, regarding the rate hike, well, it's the jobs report. The Federal Reserve has two mandates. One is full employment, and the other is price stability. So we're very close to full employment, even though it's sort of sneaking away, and inflation is a bit too low. So in the employment report, we have figures about jobs, of course, and also wages, and wages impact inflation. So it's very, very important. And we have a question from Stuart. Good morning. Can you explain again why Euro and Japanese are safe haven currencies? Sure. This has been an ongoing theme. I gave a webinar for FX Street yesterday, in which I gave a much wider explanation. But in short, interest rate in Japan, interest rates were traditionally very low, so it was always used as a funding currency. Okay, so corporations, governments took money in cheap Japanese yen, cheap interest rates, and spent it elsewhere. Took risks. That was the famous carry trade, for example, before the financial crisis. Going long Aussie against the yen or Kiwi against the yen, okay, because you got a much higher interest rate. And then in times of trouble, the money is repatriated to Japan. And we've seen a very strong example of that even when the trouble came in Japan. For example, in 2011, when there was this terrible earthquake, tsunami, and nuclear disaster in Fukushima, we've seen the Japanese yen strengthening, even though the Japanese economy was devastated. Now, for the euro, this is something new. The euro was considered a risk asset. They had high interest rates, and it wasn't a safe haven. Okay, but this has changed with the recent ECB policy. We have, since June last year, we have a negative interest rate. That means that commercial banks are punished if they park money with the ECB. And then we have QE, which lowers long-term interest rates. So the end result is that it was very, very cheap. Still is very cheap to take money in euros and to spend it in elsewhere. And when we have trouble in the world, crisis in China, and also crisis in Greece, okay? We saw the euro strengthening. And once we had an agreement on Greece, the euro actually weakened, okay? So it's very counterintuitive, but it's important to remember that this kind of phenomenon repeats itself all the time, all right? So I hope that answers your question in short, but you can look up on FX Street. They have webinars. You can see a recording of yesterday's webinar. Let me try to get that for you as well. And meanwhile, we have another question from JD Trader. Can I ask important question? Are you on Cupboard? No, actually, I must say I don't know what Cupboard is. So no, I know the hashtag NFP guesses. That's what I'm focusing on. Anyway, I'll try to look it up and put it here in the chat box. The recording of yesterday's webinar. I have it right here. I found it, so I'll put it for you. You can see the recording of this whenever it suits you fancy. Okay. Now let's move back to, we had the news from the United Kingdom. We had in the calendar here. Let's see the data. So as you can see here, we had the construction PMI in the United Kingdom beat expectations. So it came out at 59.9, better than 57.5 expected. This is, of course, good news for the United Kingdom, but it's important to remember that the construction sector was always the strongest one. Let's see if we have a reaction on cable. Yes, we have, well, it's nothing extreme because markets are awaiting the non-farm payrolls later on, but we have cable at 151.65, rising in range. Well, has it bottomed out? Yes, no, I'm not so sure. So that's what's going on over there. Euro pound, let's see if we had a reaction there. Yeah, so we have support at 73.50. We're still not there, but we're seeing euro pound slide thanks to the good figures from the UK. And your favorite, oh, do we have a break? Perhaps. The dragon pound yen is up above the 182 level. Maybe it'll look better in the 30-minute chart because we had the news at the bottom of the hour. So we have this 182 level on pound yen that capped the pair, and then we have this break higher. I would say that it's not confirmed quite yet because of the tensions towards the non-farm payrolls. So regarding pound yen, if we have a positive figure, I think pound yen can go up, and if we have a negative one, it can fall, because the pound is more a risk currency or a normal currency, and the yen is a safe haven currency. Yeah, who knows? Yeah. Any more questions? Oh, now I get the question. Yeah, no, I'm not in a cupboard. I'm in my home office. I thought you were referring to some website I'm not familiar with called Cupboard. Yeah. No, I got this question also yesterday, and I'll try to change the background to make it look a bit less like a cupboard. Maybe I'll put a big globe here. It'll look better, won't it? Anyway, you have more questions about currency pairs, about too risky to trade before the NFP, asks Span. Yes, I think, yeah, I agree, because you never know what's going to happen. If you place a trade now, it's like placing a bet in the casino, because, well, maybe some people have inside information, but I don't, and I guess you guys don't have either. So, and you never ended. It's very volatile. It's it can go crazy. So it's better to look at the result. Sometimes we have the wrong reaction at the very beginning, and then we have the full reaction later on. So it's better to look at the outcome, take a deep breath, make a decision, and then trade. And you can also take a deep breath and decide not to trade. The markets always present more opportunities, and there's no rush. Okay. Well, but life doesn't end. Of course, there will always be more opportunities. So we can look to Monday. First of all, on the weekend, we have another speech by Bill Dudley. Once again, he's going to talked quite a lot. He did talk about raising the rates in 2015, this year. And then on Monday, before the show, we have Australian ANZ job advertisements and Eurozone services PMIs, the final numbers. Later on Monday, we have more interesting stuff, but we'll talk about that, of course, much more in detail on Monday. I think that early on Monday, we'll have just more reactions from the non-farm payrolls. Any more questions? Let's take another look at markets. At euro dollar, oh, that was pound dollar. Well, pound dollar rose up to 150, 172, and now it's back 15 pips lower. So the reaction is a bit muted, but it probably goes hand in hand with a small slide in euro dollar. All in all, it's in range in a triangle. Let me put on the daily chart. Yeah, it's going steep to the downside. Resistance is a bit steeper and support is more moderate. NFP, no fool's play plus gamble. Yeah, I certainly agree. JD Trader. Another question from Pan. Take a picture of how many screens and put it behind you. A few flashing lights, also helpful. Yeah, that's right. Yeah, flashing lights always work. It looks fab. Anyway, another good thing from JD Trader: never take a loss. Home on Friday. Peter L. Brandt. No give back Friday. Background green screen of the beach. Yeah, okay. I have here a map of the Spanish wine regions. I think that can be nice as well. Don't you think? I'll try to find something nicer for Monday because a crowd pleaser. By the way, where are you guys from? Anyway, let's see if we have any exciting movements here. Double bottom on Aussie dollar, not changing a lot. Okay, a question from Stuart. To what extent is Dow and Nikkei a barometer for JPY? Both. I think it's more related to the Nikkei recently. So when we have, I'll give you another picture of the cupboard. When we have stock markets in Japan going up, we have dollar yen going up. It's sort of risk on, everything's good, markets are moving higher, we can take risks, we don't need the safe haven Japanese yen. And then when the markets are going down in Japan and also in China, it goes the other way around. I must say that a year ago we had more influence from the Nikkei than today. Today we have, in the past few months, the Shanghai stock market, Shenzhen, but especially Chinese stock market in Shanghai, a lot bigger impact on the dollar yen. The Dow as well. I would look more to the S&P because it's a wider index than the Dow. The Dow is sort of the blue chip, the old school stocks, and less. And the Nasdaq is more tech. So I'm looking more at the S&P. S&P 500, yeah, they have an impact because it's sort of a straight correlation. Stock markets up, dollar yen up. Stock markets down, dollar yen down. But of course, these are not the only factors. So you're from London, okay? How is it in London? Is it sunny there? Because here in Barcelona, it's sunny after the rain. UK home of wine now. Yeah. Okay. Any more questions? Let me just yeah, go back to euro dollar. Put the chart back on. In the bigger scheme of things, 114.60 is the really important line on euro dollar, and 108.10 is the really important line there as well as support and resistance. When we see a real break, not a swing, not a stock market related break of these levels, then we can say maybe that the euro dollar pair has chosen a new direction so far. I don't think we're seeing it. Maybe this NFP will give it some movements. I mean, I'm fascinated by euro dollar, but by the news, but the movements have been quite shallow, to say the least. Any more questions, or maybe I'll start the wrap up for today? Well, you can ask questions and I can answer them also after the wrap. So let's begin. This is the wrap up for October 2nd, Friday. It's Jobs Day in the US, very important day as always, the first Friday of the month. But before jobs, we have previous data. Jobless claims in the US came out as expected, but manufacturing PMI disappointed with 50.2 points. It shows that the United States manufacturing sector, as other places in the world, is on the verge of contraction. We're still expecting a hike in 2015 from the Fed, because that's what Williams told us again, repeating what we heard from Dudley and what we heard from Yellen. News from elsewhere was quite as expected in Australia. And Draghi, which likes to move markets, he didn't do anything specific at his recent speech. We'll hear from him next week as well. In general, as aforementioned, global manufacturing doesn't look good at all. It's not only China. Markets are very, very tense towards the non-farm payrolls. That means ranges are very, very narrow, and we're expecting them to explode. There's more political pressure and on the Bank of Japan to ease monetary policy as the recession looks real, and we don't have bad news from China because they're on holiday. Today we had construction PMI from the UK. It came in better than expected, 59.9 points. Was a small positive reaction on pound dollar and a few other pound crosses, but nothing extraordinary. And the big event of the day is non-farm payrolls, followed by factory orders and a speech by Stanley Fischer. NFP figures we're looking. Their figures for September, the last month of Q3. 203,000 is expected, better than August, and we're expecting a significant upwards revision for August. That's because of past behavior. Okay, unemployment rate is expected to remain unchanged at 5.1, but that's also a factor of the low participation rate, which is also expected to remain unchanged at 62.6. More importantly, average hourly earnings are expected to rise 0.2 month over month, and the bigger focus is on the year over year. It was 2.2, and hopefully we'll see it rise to 2.4%. This is, of course, guidance towards the Fed's decision in December. We'll need a really big surprise in order to change expectations for that. But who knows? Maybe we'll have a breakout of wages, if not jobs, and it'll be positive. Maybe we'll have weak jobs, and it'll be, of course, negative. Other figures: U6 unemployment rate stands at 10.3%, and hopefully it'll fall a bit more. It's on a downtrend, which is a good thing. Employment in the United States, unemployment is falling. Average work week is expected to remain at 34.6, unchanged. Contrary to previous months, we don't have the ISM non-manufacturing PMI before the NFP, so we had a few less hints. So maybe we'll see a stronger reaction. Okay, and Monday we have more Fed speak. Let's for this wrap just mention a few charts very quickly. Euro dollar is squeezing in a triangle in range. Bigger range is 111, 113, or even bigger 114.60 to 108.10. Maybe we'll see it explode. Pound dollar is, well, it had so many consecutive days of falls. Now it's rising a bit. Let's see what happens. The pound is sensitive to an interest rate hike in the US. Dollar yen, yeah, daily chart. This 120 level is very dominant. The pair is hugging this level. Will it explode this time? Still to be seen. We did have movement in dollar CAD. We had a correction after breaking to an 11-year high. So now we're over 200 pips below the peak of 134.60. Canada depends a lot on demand from the United States. Aussie dollar is a bit above this 70 level, and we have double bottom at 69.30, and we have 71 is stronger resistance. And Kiwi dollar, which I personally follow, I don't know if you guys, it has also moved up because of improving stock markets in the past 2 days. 64 is now weak support, then followed by 63 and 65 to the upside. Okay, so that's it for today. That's it for the week, actually. So thank you very much, everybody, for coming. Feedback, negative, positive, is always welcome. To me or to Mauricio of FX Street, who runs the show, you're welcome to post charts, to ask for more fundamentals, more technicals, whatever you wish. We'll try to listen and improve every time. And good luck with for everybody on Jobs Day. So that's it for today, and happy and safe trading. Goodbye.